For those of you who don't know, I am relatively a recent transplant to Maryland. And so I'm still learning about all sorts of things that there are here. And I'm not currently a homeowner. So to do that, I'm actually gonna turn it over to Lorna May, who's here somewhere. And she will be introducing today's speaker. So if Lorna May is still here, I don't see her on. There she is. Okay, you're muted, Lorna May.
Okay, can you guys hear me?
Yeah.
Okay. Unfortunately, my keys are not working. So Amy, if you wouldn't mind, but I want to tell a little bit about this is Miss Amy Wolff, and I had the opportunity this year to become a homeowner, and I just thought the service that I received from Amy was just so awesome. Amy, I apologize, my computer isn't working for me to do your bio. So as if you don't mind, when I'm finished telling us a little bit about you, but I became a homeowner in June 25th of this year, using a program that Amy went beyond and above to make sure that I was able to get. So I would like to thank Amy and welcome her to I Am, and take it away.
All right. Well, I'm Amy Wolff. I am a branch manager here in Frederick of the Amy Wolff team of direct mortgage loans. Just to let you know a little about me is I actually have a history as working in the nonprofits. I was a social worker previously. I worked for the ARC of Frederick County and actually ran the Baltimore City Division of Service Coordination. And so I have a, a weird look on the mortgage world. A lot of people call me the social worker of mortgages. My team and I are really here to help people to make sure they're able to access the services, that they're, taking advantage of some of these great programs that are in the area. The state has amazing programs, as well as Frederick County has some really amazing programs as well. And so we just pride ourselves on, just making sure that we're putting people in, put them in the right direction, and helping them to get to where they need to be. So with that being said, today I'm going to go ahead and share my screen so you can see another PowerPoint presentation. See if I can get that to go. All right. So today we're going to be going over Home Buying 101, down payment and closing cost assistance. Now, as we're going through this, I'm going to be focusing on the HomeAbility program, which is actually the program that Lorna May used. But I'm also going to quickly touch base on many other programs that are available, just so you have a basic knowledge of kind of what kind of programs are out there. Okay. So let's see if I can get this to work here. All right. So there are many options to help you purchase a home, whether you're a first-time home buyer or a repeat buyer. And so today we're going to roll through programs from the Maryland Mortgage Program, the Homeowners Tax Credit, Frederick County Homebuyers Assistance Program, Prosperity, Sold on Frederick 2, Housing Voucher, Credit Cafe, and other county programs. Once again, I'm going to be focusing mostly on the HomeAbility program. Most down payment and closing cost assistance programs require homebuyer education and some sort of homebuyer certificate. Later on, I'll be giving you guys that link. Also, most of these programs have some sort of income limits that are set by the county or state. And for the majority of these programs, you also cannot currently own another home. When you're looking at down payment assistance and grants, there's two different main types of assistance. And so it's really important that you guys understand the difference between the loans versus the grants. And so the loans are what most of these programs are. And some of the loans that are out there have repayment terms, but most of them are what we consider a silent second mortgage. And by a silent second mortgage, that's exactly what we mean, is it just sits there silently. So in the effort of or the example of a loan, you would have your first mortgage. It would be a normal, just first loan to buy your house. But behind it, you would have a second mortgage, which would be for this down payment and closing cost assistance. It sits there at 0% interest and 0 payments, and you never have to pay it back unless You either sell your house or you refinance, or if you move out of your home and you turn it into an investment property. These programs are for owner-occupied properties. Now, grants on the other side, this is typically the free money. And so if you ever hear somebody saying grant, make sure they really mean grant, because a lot of times people use those words interchangeably, but they are very different. And this is typically free money with no repayment terms. And there could be refinancing options available as well after you get one of those grants. So first today, we're going to start with the Maryland Mortgage Program. Once again, I'm going to roll through pretty quickly some of the programs that they have out there, and then we will spend a lot of time on the Home Ability Program. All right. And all this stuff is actually, if you were to Google Maryland Mortgage Program and pull it up, you would actually see two different columns for the Maryland Mortgage Program. The first column would be in a yellow color, and it would say must be a first-time home buyer. The second column would say you could be a repeat or second-time or first-time home buyer. And so the very first program that you see up here, this is the First Time Advantage Direct. And this program has no down payment assistance. So most of the time when people are coming to us, they actually don't utilize this program. This program just gives you a reduced interest rate. But most people also need a little bit of money. They need some help. And so somebody just asked if you can get a copy of the PowerPoint, and yes, I will make sure that I send that over. The First Time Advantage, the conventional rate is around 3%, and the government, which is FHA, USDA, and VA loans, that's at a 2.375. So it's a reduced interest rate from the state if you're not needing any money from them. Then we go into the $5,000 and also the 3% loan. And for both of these, you're either going to get $5,000 in assistance from the state or 3% of your loan amount. And as you can see with these interest rates, instead of getting that reduced rate of the 2.375, the interest rate on that same government program goes up to about a 3.125. That is still an amazing interest rate, okay? Now, 3% of the loan versus $5,000, we solely determine which program we put you in based off of which one's going to give you more money. If you have a loan amount of $200,000, you're going to get $6,000 for 3%, so we would use that. If you only had a loan amount of $100,000, we wouldn't want to give you $3,000. We'd rather give you the $5,000. So pretty simple there. All right. I don't know why it's not moving to the next screen. There we go. The next programs are for repeat or first-time home buyers, and this is actually the same three programs right in the rate that we just looked at. The interest rate is just slightly higher by 1/8. So instead of that 3.125 on that $5,000 Flex 5,000, it's going to be a 3.25, and for these programs you would get $5,000 or that 3%. Okay. Now at the bottom down here you see a Flex 3% grant and a Flex 4% grant. These are my favorite. Right? The word grant is why I like these. Even though I know the interest rate's higher, the interest rate on that Flex 4% grant right now for a government loan is 3.875. Now, the reason it's one of my favorite loans is because not only are you getting money, but you're getting money you don't have to pay back. Okay? So if you were to buy a home for, let's say your loan amount was $200,000 when you're purchasing a home, you would get $8,000 from the state of Maryland if you were to use that Flex 4% grant. The thing that I really like about these programs is that after you've made 6 payments, so in 7 months, we can go ahead and we can refinance you down into whatever the rate is at that time. So 3.875 is still really, really amazing rate. However, 7 months from now, if the rates were still in the low 3s into the high 2s, you could take advantage of that and not have to pay that money back. Okay. All right. So next we have the Smart Buy program. This is another program just to let everybody know is out there, and the Smart Buy is going to provide up to $35,000 in student loan debt to eliminate student loan debt. The thing with this program is that it must eliminate all of your student loan debt. So a lot of times we have people come to us that want to access this program, but they might have 45, 55, 65, 100 plus in student loan debt. If you were to have $40,000 in student loan debt, we could utilize this program but you would have to bring $5,000 of your own money to pay off the remaining balance of your student loans. This program is forgiven over a 5-year period. So the grant programs, there's no repayment. The loan programs we were looking at are always silent second mortgages that eventually you'll pay back. And here with this Smart Buy program, 1/5 of the $35,000 is forgiven each year. So if you were to sell before the 5 years were up, you sold in year 4, you would owe 1/5 of that back. All right, and then this brings us to one of my favorites, the Maryland Home Mobility Program. And this program here is going to give you up to $45,000 for anyone who has a disability or for someone who cares for someone with a disability. All right. Now, there are caps on these programs, and there's a lot of rules that go along with it. But the interest rate for this program is a 3.625, and once again, that rate is what was there today. Those interest rates change all the time. When we first started selling these programs, they were up in the 6s, and you've seen them coming down, you see them going back up. It's going to be based off of whatever the market interest rates are at that time. Right now, interest rates are extremely low. But they're going to give you up to $45,000, and how this program is structured is it was designed to be for a max purchase price of about $180,000. Now, it's not to say you can't go higher. This is just how it was designed. And it's designed as a conventional loan where you're going to put 20% down. So the state of Maryland gives you 20% down, $36,000 to be used for your down payment. And then they give you another 5% to be used as your closing cost assistance. Now, I don't know, we're kind of just going over the down payment and grants. We kind of didn't go over like the normal part of buying a house. But, there's down payment and then there's also closing costs. And when you're looking at closing costs, closing costs you typically range anywhere from, 3.5% up to 6% of your purchase price. And the reason there's such a big range is it depends on how much your house is worth or how much your house that you're buying for. If you're purchasing a home for $400,000, chances are your closing costs are going to be more around like 3.5%. But if you're buying a house for only $100,000, your closing costs are probably going to be over 6% because a lot of the closing costs are fixed costs. Like I have to pay for an appraisal, flat fee, $500 to $600. I have to pay for the title work. I have to pay for all these different items. So the percentage doesn't really stay clear. It changes based off of the purchase price. Now, so that's how it's supposed to be used. Now, a lot of people, especially here in Frederick County, they have found that it's hard to find a house at that $180,000 mark. Now, this program, once again, is good for all of Maryland, not just for Frederick County. But you can also change this, and we can stretch the purchase price up to $225,000. And we would still use one of the requirements of this program is you have to put 20% down. Well, 20% of $225,000 is $45,000. So we can use the entire $45,000 as your down payment, but then you still have the closing costs that will probably range somewhere around, let's say, $10,000 to $12,000. So we would have to either have you pay for that on your own, or we'd have to ask the seller to pay for those, or maybe even utilize another down payment assistance program or grant to try and help cover some of those for you. All right. You must be a first-time home buyer for this program. Now, for these programs, a first-time home buyer doesn't necessarily mean you've never, ever owned a home before. For all of these programs, or the majority of these programs, you become a first-time home buyer again after 3 years. So as long as your ownership in a home was over 3 years ago, you would be considered eligible for this. Now, you can see that there's income limits for every single county. And so Frederick County has one of the highest. Frederick, Montgomery, and PG County, and Calvert County, household income can be up to $102,000, and you can still be eligible for this program. All right. Now, some other counties, you can see Dorchester right above that is at $57,600. So as people go from county to county, one that we find is people many times are looking in Frederick, and then they find a house right into Washington County. And you can see that for Washington County, it goes all the way down to 61,040. So there's a very big difference in the eligibility for the income. Now, this has nothing to do with whether or not you can qualify for the house, right? This is whether you're eligible for the program. Okay, so we're always doing two different math calculations. We're doing, is your income in line with being eligible for the program? Then we're going to look later at is your program good, or are you eligible, and can you qualify for the house? Can you afford the house? That's the most important part in the end, right? We want to make sure that you can afford your monthly payment. We don't want you to, get into a house and then get foreclosed on or not be able to make your payments. Okay. There is a certificate of disability that is required. And there's actually a link in there in the PowerPoint. I'll make sure I get this out to everyone. And you can either have your doctor fill that out. We've helped people that had vision, hearing. We've had multiple sclerosis. We've had someone who was caring for a child who had ADHD. You're going to see a wide range of anything that falls under, having a disability. The thing that doesn't fall under having a disability is going to be any drug or alcohol issues. That is not something that the state of Maryland has opened up for anyone. All right,
Amy?
this is, sure.
Now we have a question. I just want to make
Sure.
sure that gets answered here.
The max price.
Yep.
Yeah, so the max price is technically $225,000 for that program. Okay. There is no max price for the other programs that are out there, but for the home ability program, it's $225,000 unless, there's always these caveats, unless you have your own money to bring and throw at it. Okay, so the rule is you have to have a 20% down payment. So if you wanted to go up to $235,000, then you would have to bring $10,000 of your own money to go towards the down payment. In addition, we would have to, well, actually, let me pull my calculator up because I don't think that math sounds right. So let's say you're buying for $250,000. Okay, you have to put 20% down. Whoops, I didn't put an extra zero. Okay, so you have to put 20% down. The state is only going to give you $45,000, so you're going to need $5,000 of your own money in order to go up to the $250,000. Plus, then we have to figure out how to cover all your closing costs. Okay, but if you don't have your own down payment money, and if you want to utilize this program without bringing your own money, then you're going to be capped at the $225,000. Okay. All right, and then so this is what the certificate of disability form looks like. It is located online, and either a health, mental health, or disability professional needs to fill that out. Or if you have Social Security disability income, usually we can just use the proof of you getting that SSDI, and that sometimes that can work. But in the end, the state of Maryland gets to decide if they deem you as being eligible for this program based off of either caring for someone with a disability or having a disability. So this is usually one of the first steps. We get this form filled out, and then we send that over to make sure that you're eligible for the program based off of the household income limits as well as this. Okay. All right, let's see here. How long is the process? Good question. Let me back up a little bit. So the process from start to finish for all, whether you're doing a loan with a Maryland mortgage program or any of these grant programs or without, I would say is 30 days. Now, a lot of other places are going to tell you that, oh, if you use one of these specialty programs, it could take 45 or 60 plus days. The truth of the matter is that once you come to us and we get you pre-approved, the pre-approval process takes from application to you getting your documents in about 72 hours after we have all your documents. And the normal documents that we're going to ask for from someone is things like your driver's license, Social Security card, pay stubs for the past, everything's in twos. So pay stubs for the past 2 pays if you get paid every other week, your past 2 bank statements, your past 2 years of tax returns, your past 2 years of W-2s. We take a look at all those, and then we're going to get you pre-approved. The time once you're pre-approved, that's when your house shopping starts, okay? And so for someone who is just going out and starting out to shop, that part could take a long time, right? I mean, you could find a house, especially if you're trying to stay in this 180, 225, you're right now fighting against probably 200 other people that are looking in that same range, right? And so it's a hard spot to find a house right this moment. Although actually I saw a couple go on the market today. They'll probably be gone by the end of the day today. But it is a great program for that. Now, once you find a house, now you're talking about 30 more days, okay? From the time you find a house, you go under contract, then we're asking for 30 days. Like I said, a lot of other places will say it's extended. We actually, on my branch, I actually have one girl who her entire job is to make sure the packets are submitted correctly to the Maryland Mortgage Program while we're doing the normal first mortgage next to that one. So it's actually 2 loan applications at the same time. One is a traditional first mortgage, and then the second one would be for any down payment assistance programs. All right. For all of these programs, it's really important. While credit score is definitely something that is important, you have to have a minimum of a 640 credit score. Okay, so we do help people with credit repair. I actually used to teach a class here in Frederick for the Credit Cafe. I don't know if any of you have ever been to that before. It's a really nice program that they have there. And if we will give you credit suggestions, but if it's something where you need some more help with credit, we actually do a referral out to a place called My Credit Guy, and they'll do a free evaluation, and then you can decide if you want to hire them for their services. I did put a link in here. The credit score is a 640 once again. A 640 is the minimum score. This link here, this is if you wanted to take the online class. This will give you a certificate that's required for all down payment assistance. You have to have this class. There is one in Frederick that is a face-to-face class. It's really nice. But we also have this one here that is actually free with this link. And it does give you a lot of good information. It gives you a little test at the end to make sure you're comprehending the information that they have. So that's the basic stuff on the Maryland Mortgage Program. We'll roll through some of these other programs. But let's see, can we stack down payment? And all right, so we got a question about whether or not we can layer these programs. And so with the Maryland Mortgage Program, in most cases, the answer is no, unless there's some sort of grant program that's out there. But for some of these other programs, we can stack these programs. So we can use, for example, the Maryland Mortgage 4% grant, along with the Frederick County HAP or the Prosperity Program that's out there. Okay. All right. So let me move on to another. I'll definitely get you guys that link in the chat, and I'll make sure we get that out to you. Well, I don't know if I can copy and paste this. If somebody wants to type that in. Educate Framework, homeownership.org. Okay. So any questions about the general Maryland mortgage programs, or also any questions about the home mobility program that I can answer before I kind of just move on and kind of brush over other programs that are out there? So if the home needs physical, okay, so any accommodations and those kind of things. Frederick County does have some money that's out there. I think Service Coordination also has some money that's through the ARC of Frederick County. That is not something that we actually have loan programs for accommodations to the house. However, we also have gotten creative sometimes. If somebody needs to have some sort of a modification, we might be able to talk to the person you're buying the house from and kind of get that rolled in if it's just like a ramp or something like that that's needed. The USDA loan programs, that's a program that offers 100% financing that we also can use this Maryland mortgage program. So we can do USDA for 100% financing, and then we can use the Maryland Mortgage Program, either the 3% grant or the 3% loan program or any of those other ones, and we can use that to cover the closing costs. If the house appraises high, USDA allows you to roll in repairs to the home up to $10,000 if needed. So that's pretty neat. All right. We're going to talk a little bit about the Homeowners Tax Credit. So the Homeowners Tax Credit, if you were getting ready to buy a house, this is a program that people don't know a whole lot about. And if your income is under $60,000, then you can apply for this Homeowners Tax Credit to reduce the property taxes that you pay each month. So when you're purchasing a home, you have your property taxes. The bill actually comes out every 6 months, semi-annually here in Maryland. However, you pay it on a monthly basis as part of your mortgage in most cases. This credit can put a cap on those taxes. So a lot of times, especially down in Frederick City, taxes could be much higher, and this could put a limit on those taxes. There's a nice little chart here that shows, if you make $30,000 a year, your taxes are actually not allowed to be higher than $1,680. So that would mean $140 per month is the max that you would have to pay in terms of your property taxes. So this is something that's really important, that if you're going to utilize this program, that you apply for it in advance. As soon as you get your contract, in this situation, you would actually need to probably a little bit longer than 30 days, because they might take up to 30 days to process your application for the state of Maryland. So we would ask for people to give us about 45 days if you're accessing this tax credit.
Hey, Amy.
Yeah.
It's Dave. I just wanted to jump in for a second because
Sure.
there was a question in the chat about making sure that the homeowner tax credit is available across all of Maryland, not just in Frederick County. A lot of the participants for the IAM show today are from all over the state, not just here in Frederick, like you and I are.
So yes, they are. So all the programs we've gone over so far are available everywhere, as well as that tax credit is available everywhere. And the next thing I was going to get into was the county-specific programs here. Okay. Now somebody just put in there, they believe the application closes on October 1st. The application for the tax credit waiver, it does not end, but you do have to reapply for it every single year, and that's what you're talking about, is your new applications have to be in by October 1st. They have a little caveat where you can apply before you buy the house, which really helps people to be able to qualify for a little bit more. Okay. All right. And then we'll roll through the Frederick County programs, and then I also have other counties in here as well. And really what I want you guys to get out of this is there's programs, not everywhere, but in many different places there are programs that are available. Okay. And so just for an example, Frederick County has a Frederick County HAP program. You can get up from $8,000 to $10,000. The property must be in Frederick County. You must live or work in Frederick County. Income limits are a little bit different for every single program. And here you see that the income limits are slightly lower than what they were on the for the home ability program. I will pull up a quick mapper of the state program as well, so you can see the income limits there. Frederick County, that's the rules for that. There's also Prosperity Savings Account with United Way. They've actually just upped theirs to where you can get up to $11,000 now. They have Frederick County is one of the only places that I'm aware of in the state that has a Housing Choice Voucher Section 8 program, where you can actually convert your Section 8 voucher into home buying dollars, which is pretty cool because it stops that cycle of people being on assistance, because now their family's going to end up owning a home. Sold on Frederick too, they've got different income limits for that as well. I think I mentioned that Frederick County has a credit cafe, which is now online. So if anybody's interested in learning about your credit, I don't think they really care if you live in Frederick, but you'd have to check with them. Montgomery County has a program that is up to $25,000. This is a loan as well, and this is also the same as the Maryland Mortgage Program. Washington County also has some programs for Hagerstown that you can use in conjunction. They also have a Hagerstown citywide down payment up to $7,500. That's some information on there. And then Prince George's County also has a program up to $10,000. Howard County all the way up to $40,000, depending on your income. And so, you know, the purpose of today is not necessarily for you to learn the ins and outs of every single one of these little county programs. It's to let you know, number one, about the HomeAbility program that, you know, has great services, but then also for you to know that there's a lot of programs out there. And that's really important. We did talk a little bit about USDA allows you 100% financing. There's actually a mapper to make sure you're in a rural area. Anybody who lives in this Frederick area here knows that or has heard of Urbana before. Even if you're not, you may have heard of it, but Urbana is one of those areas that it was a rural area 3 years ago, and now it's no longer considered for USDA financing. They're like their own little city. So these maps do change year by year. And like I was saying, to recap, there's a lot of down payment assistance programs that are available. There's a variety of qualifications, and you just want to find somebody to work with that you know and that you trust that's going to make sure they're putting your needs first. Here on the Amy Wolff team, we are experienced in helping clients with down payment assistance. We're known as being, like I said, the social workers of mortgages. We love being creative and figuring out how to, you know, get people into the house, and we really have to understand your particular scenario to make sure that we're, you know, putting you in touch with the right programs. We do have a pretty amazing phone app that you can install on your phone. You can actually, and I'll make sure I get this this bit.ly into the chat as well if somebody wants to type that in there for me. That you can install on your phone. You can run your own numbers. There's a nice little calculator button down here at the bottom. There's also links for the Maryland Mortgage Program to all the interest rates and those kind of programs. You can just click on the button and apply right from there. But there's a lot of great information on there that you can feel free to get. So, and this is all my contact information. The main number that's on there for our office line and the text line. Our office is a little bit different as well, is that I have a large team. We have 18, actually 19 of us now, and we all do take turns working the weekends because that's when people normally need us. So, you know, we are available. We're here to, you know, to make sure we can answer any questions and things that you have. Somebody just asked if our service is free. Yes. So, applying for a loan, in the end, we are part of the closing cost, right? So in the end, I can't say it's free, but our consultation is free. We don't even charge you for credit checks. So we will take your application, we'll do a credit check for you, we'll teach you about your credit, we'll teach you about the home buying process, we'll teach you about these different programs based off of which ones you qualify for. And we really try to put a plan in place for people so that they can, you know, make a best step forward to make sure that they are going to, you know, be in a house that they can afford and that they're really going to enjoy living in. Let me see if I can, I don't know if I can, I was going to try to, let me stop a share real quick. I'm going to see if I can pull up a web page real quick, and then I can share that back just to give you guys just a quick idea also about how much of the information for the Maryland Mortgage Program. The interest rates and everything that I'm showing you, they're not set by me. They're not set by Direct Mortgage Loans. They are set by the Maryland Mortgage Program. And so this is just to give you a quick idea, but if you just type in Maryland Mortgage Program, here's their interest rates with all those different programs that we went over today, okay? The income limits on these programs are pretty high. So the one that I showed you for the HomeAbility actually has its own smaller cap. But here, you'll see all of the different counties that are available. And I'm going to go right to Frederick again, but for a family of 1 or 2, you can make all the way up to $154,800 and still be eligible for these programs, right? A family of 3 or more up to $180,000. These does consider household income, okay? So, you know, if mom, dad, brother, sister is they're living with you, you know, really they are looking at all of that income. Same thing with USDA and those programs as well. Okay. So I know that was quick, but I
Amy?
wanted to, yes.
Sorry,
yes.
I must have wrote down or typed in your Bitly link wrong. And
Oh, it looks like Stacy just
they
sent
did
it
it.
out as well. Hold on, let me
Make sure everybody gets that.
there. I just put it back in again.
The one that I
think.
put in works, so try that one.
Oh, okay.
Okay. Let me do this too. I just realized I didn't do it to everybody. Let me try that again. There we go. So you can try that link there, and that should take you there. Yeah. So any questions at all? Just to be clear, Direct Mortgage Loan is one of MMP's approved lenders. Yes, we are one of their lenders. We also are one of their silver tier lenders. We do a lot of MMP deals. They actually, when somebody goes on the Maryland Mortgage Program site, and if you start clicking, they do a round robin to lenders that they know and trust that will know these programs inside and out. We are one of those. So we get several referrals per day from the Maryland Mortgage Program. A lot of people just come to us directly so that we can help them out. All right. Somebody asked for the minimum income for HomeAbility. There is no such thing as a minimum income, right? However, you are going to have the minimum income that you would qualify for a house. And so let me share my screen one more time. Just let me pull a calculator button up real quick. And so just to give you a basic idea is if you make $60,000 a year, okay, you make $5,000 per month. In the normal lending world, right, you can't have your housing payment be more than 43% of your before tax income, okay? So you wouldn't qualify for more, at the most, $2,150 for a home purchase for the monthly amount. That would count your taxes, your insurance, your mortgage insurance, and all of those things, okay? The same thing is we take that same 60,000 and we divide that by 12. And so for your max income that you've made, you can only use 50% of your income towards your housing payment as well as any monthly bills that you have. Now, this doesn't count your electric and your utilities and those kind of things. But what this does count is it does count things like, let's say you have a $350 car payment. Let's say you have $125 for student loans. Let's say you have a minimum credit of $25 on a credit card, another one for $52. So now your max buying power would be reduced down to $1948. Okay. And so when you're looking at, there's no minimum income, but there's a maximum that you're going to be qualified for based off of your income, right? Once again, in the end, these programs don't make your mortgage disappear. It makes it a whole lot lower because they're giving you the money to put that 20% down, especially for the HomeAbility program. We help a lot of people that may only have $500 to $1,000, $1,500 saved up in their bank account. We will help other people that come and they have $50,000 saved up in their bank account. So it's really a wide range, and there is definitely a lot of programs out there to offer to everyone. All right. Any other questions or anything else I can answer? All right. Well, thanks for attending. You'll probably think of some more questions later. The couple tips that I'll leave you with real quick. One is to maximize your credit score. the number one thing you can do is based off the utilization of your credit cards. And so a lot of people don't know this. They should teach it in school, but they don't. If you don't have a credit card, go get one. If you, and I don't want you to be using the card. I want you to take really great care of those cards. And so my rule of thumb is 10% usage. So if I have a credit card for $1,000, I try to keep my balance on that credit card under $100 at all times. A lot of other credit classes will teach you 30% utilization. Definitely don't want to go over 50% utilization. I'm sure a bunch of you are laughing going, oh yeah, my credit cards are maxed out. Credit cards are the biggest thing that affects your credit score. So, you know, a lot of times we'll be able to analyze those. We'll be able to run a quick simulator for you and let you know if you were to pay these down, how much your score is actually going to go up. But it is definitely something to focus on. Another mistake that a lot of people make is trying to pay a little bit extra to every single card that they own. And that's the way they're going to get out of debt. But you actually want to start with your smallest item. So if you have one credit card that only has $50 on it, and you pay $25 a month, pay that one off. Now you're going to have that extra 25 bucks to send to your card, your other next smallest card, and you're actually going to eliminate debt one step at a time. It's kind of like a reverse waterfall. So I would, you know, definitely suggest, you know, doing those things. And yes, you guys can contact me directly anytime you have any questions. You can call our main line. I do have a large team here. They'll be able to help you as well, but you also can ask for me. We eat, breathe, and, well, we live real estate. So we are here to answer any questions that you have at all. All right.
Okay. Amy, oh my gosh, thank you so much. That was, my brain is reeling from how much information that was. So I
Yeah.
know I'm going to need to look through the PowerPoint again. I might actually need to go and listen to the recording once it gets posted on Image Center's YouTube page or subscription or whatever that is. I am so not a social media person. But so you will send us the PowerPoint that you just used and we will be allowed to distribute it to everyone.
Yeah, I will email that over. Actually, Lorna, I think I already sent it over to you. I don't know if you were able to open it or not. It may have been too big. So if it is, we'll figure that out, figure out how to get that shrunk down slightly so that we can get that to you. I would suggest, you know, it is a lot of information. And once again, we don't expect you guys to know all of this stuff, right? And so what I would suggest is a one-on-one consultation if it's something that you're looking at possibly doing. Everyone always asks me also, when should I apply? When should I start? And my answer is always the same. It is always now, now, now. And I don't care if you're buying 3 years from now, knowledge is power. And so you have to know where you sit. You have to know what your plan is. You have to know your budgeting. You have to know all those things so you can make the right determinations for you and your family. There's, you know, once again, there's no charge. It's just a conversation that we have. We do like to get your full application so we can point you in the right direction. But yeah, we are definitely here to help, and you can reach out to us at any time.
So Amy,